Welcome back, traders, to another exciting live session. Currently marking out our levels. Remember, that's the first thing you need to be doing when you come to your chart. So I was just going through the pairs we trade. I just mark out the levels. This gold chart, we're on the 4-hour time frame. So I just mark out our levels. this is our level. This is our level here. You can see multiple weak rejections. Price came here twice and showing us signs of rejection, and that was what we mark out that level. And you can see the size of the candle. You understand that this is the exhaustion phase. Remember the way the market moves: the push phase, exhaustion, then the continuation. So we're in the exhaustion phase. I want to see, okay, yeah, we're in the exhaustion phase and we're just waiting for the continuation up. What we are also looking at is this level. If price is going to hold this level, then we are good for buys. But if price breaks through the level, then the trend is changing. So that's what you should keep in mind. If this level hold, we are still good for buys. But if price break through the level, the trend is changing and we'll start looking for sells. Right now, we are not taking any trade. We are just waiting to see what happens, to get more evidence to take a trade. And that's what you need to be doing. You don't need to be jumping into a trade right now. We are not trading against the trend. We are just being patient. We mark out our levels. We are waiting to see what happens. If our plan is going to play out, our plan is, if price hold this level and show signs of failing to break below, like when we scale to the 15 minutes time frame and we start seeing weak rejection around the area, multiple weak rejection, when we start seeing multiple weak rejection around this area, we want price to pull back deep into the area. Price has not really pulled back like this. We want price to pull deep into the area like this, into this area, and show us signs like it did here with multiple weak rejection, and before we can take a buy. Right now we are not taking any buys. We are just waiting to get more evidence, and that's how you need to be trading. So let's wait and see what happens. And then the next chart is on pound JPY. If you have been early if you have been early when we started, you will know how we drew out this level, and it was the same principle. We identify multiple weak rejection. This is an area. Price has been here many times and left a weak rejection. So we identify this as a strong level, and that was why we draw this level from the 4-hour time frame. So the same principle applies. We want to see signs of failing to break below the level. I want to see sign of failing to break. Let me scale down to the 15 minutes time frame. So this is not enough. Don't want to be jumping into buys immediately. If price is really going to leave that level, it's not going to leave that level very aggressively. Price don't always leave a key area aggressively at once, unless maybe there is a news or something. So price is still going to consolidate around the area before it's going to choose the direction it's going. You don't want to be the first to take a trade at key levels. So that's today's tip. You don't need to be the first to take a trade at key levels. Take a buy or a sell at key levels. Second is okay as long as your probability of winning increases and you might have a more bigger lot size, but your probability of winning increases. You don't want to be the traders that immediately price. You don't want to be the type of trader that immediately price gets to a key level, we just take a buy because we expect price to respect that level and the trend to change. You don't want to be trading like that. Being second or third in the market is okay as long as you are making money. The only downside is you have a more bigger stop loss because we will wait for more evidence to take a trade. But imagine if you take 10 trades, if you take 10 trades and you are the second in the market, there's a high probability you win 6 or 7 of those trades. But if you are the kind of trader that just take a buy at key level, immediately price get to the level, you might get yourself in a pickle, in a trouble. Because when price get to a level, we don't know if that level is going to hold or that level is going to be violated and broken. So we can't just jump into a buy like that, because price usually when it comes to a level there is a reaction and it leaves a weak, a weak rejection. So if you are the first in the market, price might wake you out for finally closing above and continuing up. It's not that you were wrong, but it's just that you were too early to enter the trade. That's just the difference. Remember, there's no good or bad trade, there is just trade. It only determines on how you enter the market. That's what makes it a good or a bad trade. But generally, if you start becoming a professional trader, you identify that there is no good or bad trade. The only thing is how you enter the trade, how you executed the trade, and in retrospect, if you check, you realize that there are better ways you could have entered a trade. So that's it. Don't polarize your trade as good or bad. It's just trade. There are better ways you could have entered it. Let's get back on the charts. Thank you if you're on the live stream, and if you are new to the channel, please like the stream, subscribe to the channel. It does a lot more for the channel's growth, and it helps us reach out to more people. And if you are new to the channel, subscribe so that you get notified whenever we're having this live stream. We trade for 2 hours a day. We trade the pre-London and the New York session for 1 hour each day. So we are going to be having another live session during the New York Open. So set an alarm, and there's a lot to be learned. So let's check on US oil and see what's happening there. As I always said, you should have at least no more than 3 pairs you trade. Don't trade everything. If you really want to be in Forex for the longer term, write this down. Choose a pair to trade. Don't trade everything. Choose a minimum of 1 or the maximum of 2 trades, two pairs to trade. If you have been with me for a while now, you will understand we only trade gold, pound JPY with US oil. So whenever we don't have a trade, we don't trade any other pair. We walk away from our chart and we come back later to check if we can get a good opportunity. And that's the rule of thumb. Never trade everything. You need to be laser beam focused. That's the only way you make money. Because when you start going across the board, checking on different pairs just to get into a trade, you are not a professional, and you are going to blow up your account. Because all you need to do is you just want to take a trade, that eagerness to take a trade, and it's going to destroy you. Learn to walk away when there is no trade and focus on the maximum of 2 pairs. I personally trade 3 pairs, but I didn't start with 3 pairs. I only started trading gold. As time goes on, I added the pound JPY and now the US oil. So when I first started, I understand this principle. I understand the the power of focus. You need to focus on one or at least two pairs, and that's how you're going to make your money. It's not about trading everything. That's another tip for today. Keep that in mind. So on pound JPY, if you are going to enter a trade here, as you all know, if price is at a key level, I don't enter with an instant execution. Set a sell stop order or a buy stop order so that I can only get triggered into a trade when price start moving in my direction. So in this case, on pound JPY, we don't know if price is going to respect this level or break below it. This is a 4-hour time frame. So all I'm going to do now, I'm going to set my buy stop entry above this candle, this 1-hour candle. This is where I'm going to set my buy stop entry, and the reason for that is I can only get triggered into this trade when price start moving up. When the momentum kicks in and price start moving up, remember, price can consolidate around this key area for as long as it wants before it can choose the direction you want to go. So, but to be on the safer side, if I need to take this trade, I can set my buy stop entry so that the only time I get triggered into this trade is when price start pushing up in my direction and triggering me into the trade. So that's the only time I get triggered into the trade. But if price continue down, guess what? I'm going to delete the order and walk away. So I'm going to give price a little space to breathe. So I'm going to set my buy stop around this area, 188761. So that's where I'm going to set my buy stop, and let me do that for you real quickly. So this is the buy stop entry. So let's see. So as you can see, this is our buy stop entry. It's not an instant execution, it's a buy stop. Here's our entry, and as you can see, we have not been triggered into a trade yet. The only time we get triggered into it is when price starts pushing up in our direction. So the next thing we'll be doing is to set our stop loss. Remember, always have a stop loss on your trade. Protect your capital very effectively. That's your bullet. It's more like having a gun, and your capital or equity is your bullet. So I'm going to set my stop loss let me see. I'm going to set my stop loss below the last candle or below the level. Let me see. So we set our stop loss. We have a moderate stop loss, not too big, not too small, but it's still below the level. And you can see this is the beauty of a buy stop entry. As you can see, price is now pushing down, and those traders that took an instant buy, this candle is going to stop them out. They may call this market hunts or the banks, that's what they call it, but there are better ways to enter the market. As you can see, we have not been triggered into the trade. We're in a safe position. We can safely delete our stop order if price continue down. So this is how you need to be taking your trade. If you are going to take any trade at key level, always use the buy or the sell stop order. It helps you to set your trades, wait for it to play out. You don't get impulsive. So imagine you took a buy at this key level. This, regardless of your stop loss, there's high probability you are going to be stopped out, because when price gets to a key level, sometimes there are multiple weak rejection, and those weeks might stop you out before price start pushing in your direction. So that's what we are avoiding. So I guess you have gotten the tip or lesson for today. We are still out of this market. If price continue down, we'll just delete our buy stop and walk away and look for another opportunity. Right now we're just waiting to see what happens. If price continue down, then we'll change our bias and we'll look for a retest of that level and a continuation down. But for now, we are still leaving that buy stop order. So let's go back to, we're on US oil now, US oil chart. So this is the level we marked. So this is the level we marked from the 4-hour time frame. This is where price has been, and we expect price to get back to. So the same principle applies here. We are just waiting for price to get back down to that level and see what the reaction and see what happens. If price is going to break below the level or respect the level. If price starts showing us signs of failing to break below, we can see enter with that buy. We can see enter the trade with a buy stop order. Or if price break below and close strong below, can start looking for sales. But right now all we are doing is waiting. Remember, professional trading is 90% waiting and planning and only 10% execution of that trade. Professional trading is 90% waiting and planning and only 10% execution of that trade. You don't need to be impulsive in the market. If you are really serious about making money in Forex, this is how you need to be trading. It seems like simple things, but you need discipline. I keep saying this, I blow up many accounts. So I'm saying all this from a position of experience. I've done all these things I'm telling you guys not to do. I blow up many accounts. I'm just trying to share my experience and knowledge so that you won't go through what I've experienced. Thank you for the likes. We have 5 likes. Thank you guys. You are the reason why I keep doing this live stream every day. I need that encouragement, and it also helps the channel's growth. Remember, we are still having another live session during the New York Open. So if you are a new viewer and if you haven't subscribed, you should subscribe to the channel so that I get notified whenever we're having this live stream. There's a lot to be learned. We share tips on how to, if you are taking a profit challenge, the risk management, lot sizing of the account you need, and things to avoid to pass your profit challenges. I don't think there's a reason not to be financially free. That's the truth. I don't think there's a reason. If if you have the knowledge, just imagine a 5k challenge like the 5 percenters. 5k challenge, I think is $39. So you can save that and buy the 5k challenge, and if you manage to pass, you can start scaling up and getting a more bigger account like the 50, 25k or 100k challenge, and that's how you build wealth. And remember, you don't even have to continue trading. If you have a passion and you need capital, you can start with trading. The money you get from your payout, you can build up your business. And if your business get to a level that is bringing in more, you can stop trading and focus on your passion, on what you love. The biggest misconception is you need to do what you love. Sometimes you have to do what you don't like so that you can do what you love later in life. When I first started, I hated Forex because it reminded me of my my failures. I blew up many accounts, so anything but I don't know how to say it. Remembering it now is still painful because I'm just being honest. Starting out in Forex, it's not something I love, but I knew it was the vehicle that can get me to where I want to be. So that was why I disciplined myself, I forced myself to learn. I read so many books on Forex. I attended so many seminars in town. There are some free seminars and there are paid ones I attended, and through my own personal experience, so I learned Forex. I understand earlier in life that if you have the skills, don't focus on the money when you are first starting. If you have the skills, the resources will come. Don't just make the money the first thing. Focus on gaining the skills. If you have the skills, money will chase you. That's just the plain truth. So I had a plan when I was first starting. I knew if I had the knowledge, I can get a 5k challenge and start with. And I made a video about my prop firm challenge that I took, and that was my first prop firm challenge. But I was really determined to pass that challenge because I only had one bullet at that time. I saved for a while to get that challenge. So we are now being triggered into the trade. Okay, we have not been triggered. We are almost there. We are almost there. As you can see, as I said, the stop loss placement, you will have a more bigger stop loss. But the idea is, let me see, it's supposed to be have been triggered. Don't know what happened there. We are supposed to be triggered into this trade. Let me see. Wow. It says rejected. So I think it happens, but you get the idea. We were supposed to be triggered into this trade, but I don't know what happened there. Our buy stop should have been triggered into the. We are supposed to be triggered into the trade, but that's trading. It happens sometimes. But if you set the buy stop as I said, I think you'll be in a good position right now. And remember, the stop loss should be below this weak area. And when price start pushing your direction, if you're in that trade, if price start pushing your direction, you can reduce your stop loss to half. You can reduce your stop loss to half. Let me make this more pronounced. Let me make so that I can highlight what I'm saying very effectively. Let me do this. Okay, we are now on the full chart. So if price start pushing your direction, what you can do here is you can reduce your stop loss to half. Place your stop loss somewhere around this level, so that even though price turn back on you, you won't lose the full position. So that's one of my risk management strategy. Once I'm in a trade and price start pushing in my direction, I immediately reduce my stop loss into half. I divide my stop loss into half. If price come back and stop me out, fine, that's trading. I walk away and look for another opportunity. And when you get a one-to-one risk to reward, immediately adjust your stop loss to break even. It's very important. Focus on your risks first. Don't always be focused on your rewards, what you get. Focus on the risks first. Once you manage your risks and capital very effectively, there's no way you are not going to make money in Forex. That's the plain truth. It's inevitable. This is your edge in Forex, your risk management and your risks to reward. Try to hold your trades, your winning trade, a little bit longer. Because what I understand is when we are having a losing trade, we hold the losing trade for as long as we want, expecting price to turn back and push in our direction. But when we are having a winning trade, we are too eager to close that trade because we don't want our profit to reduce or turn back to losses. So we are anxious about our profit, that we close it very early and let the losing trade run. Some of us indulge in the habit of adjusting our stop loss. The basic fact, once you place a trade and a stop loss, it's either you reduce your stop loss to half or you go break even, or never increase your stop loss. Unless maybe at first you set it smaller, below a key level. That's the only time you are allowed to adjust your stop loss. But as long as you have set your stop loss, if price is not pushing in your direction, never adjust it, because that was why we have that stop loss, so that I can reduce our loss on that trade. But once you start the habit of increasing your stop loss placement, you're going to end up in a very big pickle. Let's see. Thank you guys for the likes. We have 8 likes. Thanks you a lot. Really appreciate the likes. Just a lot more for the channel, you can imagine. And if you are just joining us, welcome to ZyusFX. We trade live every day for 2 hours. We trade London and the New York session for 2 hours for an hour each. So if you haven't subscribed, you should subscribe to the channel so that you get notified whenever we're having these live streams. There's a lot to be learned here. We show you strategy on how to pass your prop-firm challenges, your lot size, your lot sizing, and the pairs to trade. So if you have any question, check out this video description. It's a WhatsApp link, my personal WhatsApp link, and I'll respond to you as soon as possible. And we also manage accounts. We recently started managing accounts. So if you have any inquiries on that, but we don't manage prop-firm accounts because that's a violation of their rule. So we don't manage prop-firm account. We can only manage a personal account. We don't manage prop-firm challenges account. That's a disclaimer. So before you contact me, make sure it's not a personal account. Trading make sure it's not a prop firm challenge account, it's a personal account. We don't manage prop firm challenges. Can only share with you tips, lot sizing, and the risk management strategy, and how many trades or pairs you need to trade that will give you the return and help you pass your challenges in a week. So put that in the back of your mind before you contact us. So on gold, we are still waiting. We say we were anticipating a pullback, a deep pullback to this level like this before we can get into a trade. But this pullback is not enough. We still need price to get deep like this into this level. Sure sign of multiple week rejection before we can take a buy. But we are just waiting. We are not going to take any trade now. Remember, the maximum trade we take is 2 trades per day. We prioritize quality over quantity. So only look for high probability setups or trades to take. We don't take any trade just because it look good. So that's just the way we trade. We can wait for as long as possible to take a trade, but I'm not in a rush. We are here to make money. We are not just here to trade. You can have 10 trades in a day and still be broke. So what's the point? Wait for high probability setup. All you need is 2 or 1 trade per week. Yeah, you heard me right. All you need is 2 or 1 trade per week. You can get into 1 or 2 good trades, a good risk to reward. That's all you need to make money. We are here to make money in the market, not just to trade. We don't need to trade every day. But as I promised you guys to be having this live session, we need to trade. We need to look for opportunity every day to trade. But I personally don't trade every day. I open my charts. I look for opportunities. If I can identify a high probability opportunity, that's the only time I trade. But I personally don't trade every day. I don't have a time limit. I'm trading a personal account, so I don't have any pressure to meet up with a target. So that's why I trade on my own convenience. If I feel like trading, I look for a trade. If I can identify a high probability setup, I take that trade. If I don't, I walk away or don't trade at all for that week. So that's the freedom Forex gives you. So what I want you guys to do is get the knowledge first, and the money will come. Just focus on the knowledge. You can get the knowledge, understand the basic fundamental of how the market moves. There's no way you won't make money in Forex. It's impossible. So let's check on pound JPY. So as you can see, price is pushing up. If you're in this trade already, you should go break even now. I think we have a 1-to-1. Can go break even. But it still pains why buy stop entry wasn't triggered into this trade. But it happens. I won't beat myself up. Just look for another opportunity. But if you're in this trade already, you should start going break even, scaling up to profit or something. But it happens. I set my buy stop entry and it didn't get triggered. Set my buy stop entry, but I didn't get triggered into the trade. It said rejected. So I don't know why. But I'm still grateful. Hope you guys learned the basic of how we set that buy stop entry. This was a key level we have drawn from the 4-hour time frame. If you were early when we started the live stream, sorry about that, still plot out that level. If you are early when we plot out this level, we use our previous knowledge. We can see multiple week rejection when price came before previously at this key level. So we identify this as a strong level because whenever price gets to the level, it leaves a huge weak rejection. And this is not just a normal candle. This is a 4-hour candle, and that was why we plot out this level. Price was coming down before it got to the level, so we plot out the level and waited for price to get to that level. So price did exactly that, and when price gets to the level, we start seeing signs of failing to break. It almost broke the level, but we didn't take a buy immediately or a sell. We set our stop loss around this level and waited for the momentum to kick in and start pushing in our direction. And that was what happened. Price consolidated for a while around the level. When we scale down to the 15 minute, you can see price consolidated and leave multiple weak rejections. And let's say 15 minutes later, price start pushing up, and we set our buy stop entry around this level. But mine wasn't triggering, but I hope yours was. And price start pushing in our direction. And that was a breakdown of the pound JPY trade. That could have been our first trade for the day, but hopefully you took the trade. That's good. We're all here to make money. So the same principle applies here. All we are waiting for is for price to get back down to this level for us to take a trade. Never take a trade in the middle of nowhere. Wait for price to get back to the structural low or structural highs. It's very important. Never take a trade in the middle of nowhere, because what happens is price can go both ways, can go wherever you want. If any buy you take care, there's a high probability price will go down and stop you out. And if you take a sell, there's a high probability price will go up and stop you out. So that's why we don't take trades in the middle of nowhere. We wait for price to get back to a strong level, a structural high or a structural low, for us to take any trade. So that's how I approached my trade. I don't take trades in the middle of nowhere. I only take trades at key levels, and that's what you need to be doing. I've shown you guys how to plot out your levels. This is a key level. This is where price has been to, and I've broken, come back for a retest. So this is a key level, and this is our structural level. This is where price has been, and I've left a weak rejection. This is a 4-hour time frame. It's not any other time frame. So that's how we trade. We take our trades at key levels. That's one of our strategy. We don't take trade anywhere, only at key level. And for me, the success rate has been really amazing. Just try taking your trade at key level and see if it's something that works for you. I'm just saying that out of experience. We are all individuals, but I know you want to do what works. So always try to take 10 to 20 trade at key level and see the result. If it is something that works for you, fine, do it. But if it doesn't, fine, it's trading, it's dynamic, you can look for another strategy. But one of my strategy, I always take my trades at key level. It's very important. It gives you higher probability trades. and your probability of winning increases dramatically. And I'll soon make a video on multiple time frame analysis, because I think most of you traders out there don't know how to use the time frames. You don't know how to use your time frame to get into a trade or to do your analysis. So I'm tempted to make a video on that. So but let me just share a tip for you guys. Thank you guys for the like. We have 10 likes. You guys are really amazing. You are the reason why I keep doing this live stream. Thank you for the encouragement. It's a sign. It shows me that you guys are gaining value and learning from this video. Really appreciate you guys. Thank you for being there. And if you're just joining us, if you're new to the channel, like the video, subscribe to the channel. There's a lot to be learned here. We share tips and strategy on how to trade and pass your problem challenges. Subscribe now. And all right, let me explain. Let's go back to the chart. Let me just share with you guys some tips on how to use the time frames, multiple time frame, the 4 hour, 1 hour and the 15 minutes time frame. Okay, so we are all, I'm just generalizing, we are all intraday traders. We trade every day, maybe for a few hours, 3 to 4 hours each day. So we are day traders, we are intraday traders. So you don't want to be scaling up to your daily time frame. You have no business there. Don't scale up to your daily time frame or your weekly time frame if you are making your analysis, because you are only trading for a period of 3 to 4 hours each day. So once you come to your charts, use your 4-hour time frame. The first time you come to your chart in the morning, focus on your 4-hour time frame. So this is the 4-hour time frame. We use the 4-hour time frame to determine the direction, the overall direction of the market. Where is the market going? Is the market pushing bullish, bearish, or is the market consolidating? Is the market ranging, moving sideways? So that's what we identify with the 4-hour time frame. So in this case, we are using this goal as an example. On this case, we can identify that the market is moving up. Okay. So sorry about that distraction. I needed to take that call. So as I was saying, the multiple time frame analysis, we use the 4-hour to mark out our key levels. So first we identify that the market, we use the 4-hour to identify the overall direction of the market. Is the market moving down, up, or sideways? So that's what we use the 4-hour to identify. We don't use the 4-hour to get into a trade. So on this occasion, we identify that the market is pushing up, making higher highs and higher low, higher highs and higher low. So the next thing we will do is to scale down to the 1-hour time frame. So we scale down to the 1-hour time frame to see the behavior of the market at that moment. So we use the 4-hour to identify, to see the behavior of the market at that point. So what is the market doing at that particular moment? So after we have marked out our level, we identify that the overall momentum of the market on the 4-hour time frame is up, it's bullish. What's the behavior of the market at that level? So on this time, on this occasion, price has pulled back to the key level we have drawn, and we can see multiple weak behavior identifying failure to break below the level. So the level is holding. So that's the behavior on that time frame, 1-hour time frame. We use the 1 hour to see the behavior of the market, what the market is doing. So we use, okay, yeah, so then we can scale down to our entry time frame. You can use the 5 minutes, but I personally use the 15 minutes time frame for my entries. So I use the 15 minutes for my entries, and this is where I start looking for my trades. So before I can enter a buy here, I need to wait for price to get back to some of this level. You need price to pull back like this to show signs of failing to break with multiple week rejection for us to take a buy. So I'm not buying the market here. I'm waiting for price to come back to some of this level to take a buy. So that's how that's how we use the multiple time frame analysis. I don't use the 1 hour to get into a trade. I only use it to see the behavior of the market. And the 4 hour is my first time frame. I use the 4 hour to see the general bias of the market. Is the market moving up, down, or sideways? That's the 4 hour. I use the 4 hour to identify that. Now I scale down time frame to see the behavior. What's happening around? If the market is moving up, what's happening at that key level? So that's why I use the 1 hour for. Then I use the 15 minutes for my entries. But I'm still going to make a video this week. I'm going to make, let's say, a 15-minute video about the multiple time frame analysis, so that you guys can go over it and understand it much better. Okay, so I'm not gotten into a trade yet. So thank you guys a lot for being on the live stream, and thank you for the likes. If you haven't liked the video, like it, subscribe to the channel so that you get notified whenever we're having this live stream. There's a lot to be learned here. If you have any question, check out the video description. There's a WhatsApp link. I'll respond to you as soon as possible. And as I mentioned earlier, we share with you tips on how to pass your profit challenge, the strategy, the lot sizing you need. And we have currently start managing personal account. Remember, we can't help you trade a profit challenge. We can only share with you the tips and strategy and risk management you need. The only account we can manage for you is a personal account. You can fund a personal account, give us a password, and we'll manage that account for you. And the overall loss you make on that account is not going to exceed 20% of that entire account. You hear me right? You can fund the account, we'll trade it for you, but the total loss on that trade will not pass 20%. We don't trade profit challenges account. Don't chat me up talking about profit challenge. We don't trade it. We don't manage that. Sorry, we trade profits, our profit challenges, but we don't take someone else's profit challenge and trade it for them. We can only trade personal account for you, and the losses on that trade is not going to exceed 20% of that overall trade, of that overall account. So when we manage your trade, whenever the Okay, let me simplify this. Okay, sorry about the distraction. So what I'm saying is we start managing personal accounts. So what I mean is we can manage your account for you. You can share your password, we'll manage it for you. But we are going to, when we trade that account for you, you know, trading there's a high risk. What we are saying is any loss, the loss on that account is not going to exceed 20%. So if you have 100, the maximum loss on that account is not going to exceed 20% of that account. But whenever, so if you just have a personal account, contact us. We'll talk more on that. Let's just focus on our live stream. If you have any question, check our video description. There's a WhatsApp link and we'll talk directly. You'll get more information on that. So I think we'll be rounding up on today's live stream. Remember, we'll be trading the New Year session later for 1 hour. So thank you guys. You guys are the best, and see you later.